Ask a group of retirees what worries them most, and you'll probably hear the same answer over and over again. The stock market. Every time the market drops, headlines warn about billions of dollars disappearing. Television commentators predict recessions. Social media fills with panic, and many retirees begin wondering if their retirement plan is about to fall apart. But what if I told you the stock market isn't the biggest threat to your retirement? In fact, many retirees who survive every bear market still end up struggling financially, not because of what happened on Wall Street, but because of risks that rarely make the evening news. Today, we're going to explore the biggest risks most retirees never fully prepare for, why they quietly become more dangerous over time, and what you can do today to protect the retirement you've worked so hard to build. Because the greatest retirement risks usually aren't the loudest ones. They're the quiet ones. When most people prepare for retirement, they spend years thinking about investments. They wonder how much they'll need to save. They worry about market crashes. They follow interest rates. They watch financial news. Those are important things to understand. But retirement is much more than managing a portfolio. It's managing a life. A successful retirement isn't determined by surviving one bad year in the stock market. It's determined by how well you navigate dozens of smaller challenges that slowly unfold over 20 or 30 years. Some are financial, some are emotional, some are health-related, some are completely unexpected. The good news is that once you recognize these risks, you can begin preparing for them before they become serious problems. Let's begin with the one that surprises almost everyone. A stock market crash gets everyone's attention because it happens quickly. Inflation is different. It doesn't usually arrive all at once. Instead, it quietly raises the cost of groceries, utilities, insurance, property taxes, healthcare, travel, dining out. Almost everything costs a little more every year. At first, it barely seems noticeable. But over 20 years, those small increases can completely reshape a retirement budget. Imagine retiring today believing you'll spend $60,000 per year. Now imagine those same expenses 20 years from now. Without realizing it, many retirees discover they aren't buying more. They're simply paying more for the exact same lifestyle. That's why inflation is so dangerous. It doesn't announce itself. It quietly changes your purchasing power 1 year at a time. Mindful retirees understand this. They review their spending regularly instead of assuming today's budget will work forever. One of retirement's greatest blessings is living a long life. Ironically, it can also become one of retirement's biggest financial challenges. Many retirement plans are built around averages. But people don't live average lives. Some retirees will spend 30 years or more in retirement. That's wonderful. But it also means your investments, savings, and spending habits must last much longer than previous generations expected. Running out of time at work isn't the goal. Running out of money before time runs out is the real concern. That's why flexibility matters. Successful retirees regularly adjust their plans as life changes, rather than assuming the original plan will never need updating. Many retirees prepare for vacations, home maintenance, holiday spending. Few prepare for how dramatically healthcare expenses can change later in retirement. Medical costs often arrive unevenly. You may have several healthy years, then suddenly prescriptions increase. Specialists become routine. Procedures become more common. Long-term care becomes a possibility. Healthcare isn't simply another line item in a budget. It often becomes one of retirement's largest expenses. Planning for healthcare isn't pessimistic. It's realistic. And the retirees who acknowledge this early usually have more options later. Markets recover, but emotional decisions can leave permanent scars. Fear causes retirees to sell investments during downturns. Excitement leads to expensive purchases they later regret. Grief leads to major financial decisions made too quickly. Family pressure leads some retirees to give away more money than they can comfortably afford. The common thread isn't mathematics, it's emotion. That's why some of the most expensive retirement decisions aren't investment decisions at all. They're emotional ones. The more you recognize emotions before making major financial choices, the better those choices usually become. If you find value in this content, please like and subscribe. I really would appreciate it. Most people expect retirement to change their schedule. Few expect it to change their identity. For decades, work provides structure, goals, routine, relationships, a sense of accomplishment. Retirement removes much of that overnight. Without purpose, many retirees begin feeling restless. Some overspend trying to stay busy. Others withdraw socially. Some lose motivation to care for their physical and mental health. The happiest retirees replace careers with purpose. They mentor, volunteer, travel, learn, create, serve. Purpose gives retirement direction, and direction often creates confidence. One of the biggest mistakes retirees make isn't creating a retirement plan. It's assuming they never need to revisit it. Life changes. Tax laws change. Markets change. Healthcare changes. Families change. Your retirement plan should change too. The most successful retirees treat retirement like an annual checkup. Every year they ask simple questions. Is my spending still appropriate? Has my health changed? Have my goals changed? Does my investment strategy still match my life? Small adjustments made regularly often prevent much larger problems later. Notice something interesting. Only one of these risks involved the stock market. The others involved inflation, longevity, healthcare, purpose, emotions, adaptability. Those are the risks that quietly shape retirement over decades. The stock market matters, but it's only one piece of a much larger picture. Retirement success rarely comes from predicting the future perfectly. It comes from staying flexible enough to adjust as the future unfolds. The biggest risk in retirement isn't necessarily the one making headlines today. More often, it's the quiet challenge that slowly builds year after year until it finally demands your attention. Fortunately, every risk we discuss today can be managed with awareness, preparation, and regular adjustments. You don't need to predict every market move. You don't need a perfect retirement plan. You simply need a plan that's flexible enough to grow with your life. As you think about your own retirement, ask yourself one question. Which of these risks have I been focusing on, and which ones have I been overlooking? Because retirement isn't about avoiding every problem. It's about preparing wisely, adapting confidently, and enjoying the life you've spent decades building. And if you enjoy practical retirement insights that help you build confidence instead of fear, like and subscribe to The Wealth Perspective for weekly videos. I really appreciate you watching the video. Thank you.